All right. Well, Friday marks the start of the holiday shopping season as U.S. consumers head back out on Black Friday. And this comes after last week's earnings from a number of retailers showed a mixed picture about the state of the consumer with a growing divide between the haves and have-nots. Joining us now is John San Marco, senior research analyst at Neuberger Berman. John, good to see you. My big question heading into this season is discounting, especially given that commentary during earnings season. How good will the deals have to be to keep people spending?
Yeah, on one hand, the consumer is really responding to discounting, so it's going to be a huge temptation to pull that lever. And as you alluded, the consumer picture's been kind of mixed. So, except for the healthiest retailers that are driving a ton of traffic, it'll be hard to lay off of that lever. On the other hand, retailers are still sort of figuring out how to push the tariffs through to the consumer, preserve their P&L, and discounting less is a relatively pain-free way to do that. So it'll be tricky on the whole. I think you'll see a pretty normal degree of discounting, and I think you're going to see a pretty normal on-trend level of demand for the consumer too this holiday.
I got a challenging question for you, but you're the expert, so I think you can field it. What retailer is going to be the poster child for this holiday season? I mean, maybe not the one that outperforms or the one that way underperforms, but based on what you're seeing in consumer behavior, what retailer do you think represents the mainstream enough that as it goes, so goes the general season?
I think poster child makes me think of TJX. There's a modicum of defense there because they offer such great value, and their business has historically held up so well, almost regardless of what's happening with inflation or consumer discretionary spending. And then they can also participate in the upside too. And when we turn the calendar on this year and we get to tax refund season and the consumer's going to have a lot more take-home pay next year, we should see them benefit too, particularly if housing activity gets touched. TJX should really do well. And then anything that's hard for the competition, whether it's the consumer volatility from one month to the next, or category volatility, or variance across consumer cohorts, all of that stuff makes life really hard on the industry buyers to forecast. And when it's hard on those competitor buyers, that creates a lot of availability for TJX.
We're going to see some of these housing-related and home improvement stocks start to inflect here?
Home improvement has been the slowest pocket of retail to recover. I think we're well past the point where that relative softness represents demand that's getting pent up. So, what uncorks that demand? I think it's a matter of timing. Rates stabilizing, coming down in some cases should be helpful. Existing home sales have now been flattish for 3 years or so. So that's a headwind that at worst case should move to neutral. And then Home Depot is a name within the space we really like. We think there's some self-help that can enable them to continue outgrowing the industry.
Yeah. I wonder what the inventory picture is going to look like here as we get past the holiday season, because we saw such a big pull forward, right? In anticipation and uncertainty around tariffs and trade dynamics, et cetera. So how does that set us up for early 2026? And how does that set some of these companies up for pricing?
I think, the big picture you described, I think, misses some of the small pictures, which will dictate that. And that is, tariff rates being moved around on different categories, different countries of origin, exemptions, consumer response to the tariffs as they're getting passed through, of course, as it creates its own elements of surprise. Most of these detailed factors, just as I said with TJX, just make life really hard on retailers to plan inventory. And so on one hand, they don't want to get caught long inventory and have a markdown liability building. But all these things sort of make it important to have more safety stock, more capacity to serve demand when it shows up. So it's a really tricky environment for retailers. And you've seen it this year. I think you'll see it again next year. It's such a difficult environment. The winners really outpace and separate themselves from the rest of the pack.